Welcome back, and joining me for a closer look at the day's trading session is Imtiaz Suliman from Sentio Capital. Imtiaz, thanks so much for your time this evening. Let's start off with general markets action. Some positive sentiment following that US-Japan trade deal. The next market-moving catalyst, I guess, is the Mag 7 earnings, with Google and Tesla out with numbers after the bell. What are your expectations on that front? Very different businesses. While AI is poised to make gains on the back of the AI boom, Tesla dealing with the cocktail of negatives from declining sales to, Musk's political affiliations.
Yeah. I think, the market is going to look for some direction in these earnings that are going to come out. The market has had a good run, and that's mainly on the back of some macroeconomic news. So if you look today, the US and Japan have struck a deal, and that tariff is now at 15%. So below the 30%, that was the initial tariff rate. And there was some optimism that we would see a deal with the EU, which is the next big bloc that the US is looking to do a deal with. But I think if you're looking from an individual company, how is Google holding up with regards to its search engine revenues? And that's also sort of being disintermediated by the likes of ChatGPT and some of those AI and large language models. And then Tesla, as you mentioned, it's going to be quite interesting because there's lots of new competition from a vehicle manufacturing perspective.
Yeah.
But the growth area is really going to be about the robotic side and the driverless or self-driving cars. It's still a long timeline, but I think some indication on that front would keep investors interested for some time.
And in terms of earnings, then, Imtiaz, over the past week, U.S. companies have been posting market-beating numbers. Have the earnings actually been good, or are we seeing market analysts lowering their expectations due to the uncertain economic environment?
Up until now, we haven't seen much of an impact with regards to the tariffs. And that's only going to come through in the second half of the year.
Yeah.
If or unless that gets delayed or postponed from 1st August. I think if you look at US-China, that trade deal is another massive deal, and that would likely get pushed out because it wouldn't be done by the deadline of 1st August. And companies have been managing their sort of balance sheets and the inventory through this whole negotiation. So we haven't seen much of an impact yet.
Yeah.
And the big sort of elephant in the room is the US consumer. And that's held up quite well so far. So it's been as you say, companies have beat overall in terms of market expectations, but the full impact will only be seen in the second half of the year.
All right, let's move over to what's playing out here at home. The JSE really, really resilient, and the all-share crossing the 100,000 point mark today. I spoke to a market analyst earlier, and he mentioned that SA Inc. stocks seem to just be playing catch up, with the heavy lifting being done by the gold and Platts players, as well as Naspers and Prosus. What's your take on that? And generally, what's your take on that? Because I've seen that we have been seeing steady gains in banks, retailers sort of holding up as well.
Yeah. If you look at the JSE year to date, it's up close to 20%. And there's a lot of dispersion within that performance. The big gainers has been the likes of the gold counters and the platinum counters, whilst SA Inc. counters have been very lackluster.
Yeah.
So if you look at some of the trading updates, and Mr. Price came out today, growing sales at 6.3%, but there was a slowdown in June off a high base from last year, but it's not shooting the lights out. So from a consumer perspective, wallets are still quite tight. I think you'll see some relief come through, as we already had 2 rate cuts. And, maybe we do get another rate cut next week, because inflation was also quite muted to low under control. And it does give the SARB some room to cut interest rates. So I think you should see a delayed effect in the SA Inc. stocks as well, as we're talking about the lagged effect with regards to some of the news, and that positive news from low inflation, lower interest rates
Yeah.
should filter through into those stocks as well.
And I wanted to bring in Mr. Price in that, and you've already mentioned it. Those numbers, the slowdown in sales growth, does it point to a consumer under pressure or a consumer that's spending on necessities? Because you have mentioned that we have seen those rate cuts coming through. We have seen inflation lower.
Yeah, I think the consumer is always looking for the best value out there.
Uh-huh.
But as disposable income starts to open up, you should see better top line growth come through. They have mentioned that they're still taking market share, and their gross margins are largely stable or should be stable for the full year. So they do generate very good cash, and they are in a net cash position, so a very strong balance sheet. And from a value perspective, they play into that value offering.
Yeah.
So I think for the rest of the year, depending on the global macro outlook, it should start picking up from a top line perspective, and you should see some earnings growth out of the likes of a Mr. Price.
All right, and just quickly before I let you go, what's your stock pick? What are you hanging your hat on today?
Yeah, I'm going with Glencore. If you look at Glencore's underlying businesses, they've got large exposure to copper and sort of steel making coal. And copper has been a very hot commodity in terms of its use with regards to renewables, in the making of electric vehicles. And the demand for copper remains quite strong, whilst the outlook for supply is a bit more muted because there's not many copper deposits around the world. So Glencore is well positioned to benefit from global copper demand over the long term. They do a lot of share buybacks and have committed to doing $1 billion worth of share buybacks in their last update. And if you look at it from a free cash flow perspective, also quite generative from a free cash flow perspective. So I think total returns from Glencore with regards to share buybacks, dividends will be quite positive. It's not trading at very lofty levels. And should commodity prices hold up, especially copper and coking coal, they'll benefit from those higher prices.
All right, let's leave it there. Thanks so much for your time and taking us through the day's trading session. That was Imtiaz Suliman from Sentio Capital.